let's take aluminium, because even in copper it applies. 40% of India's aluminium goes into the electrical sector. Sure. Electrical sector demand right up to November was very weak. Okay. So now those orders have all started to come. So we have started to see, you know, the investment to make the grid stronger, the grid better. All those are leading to both aluminium and copper demand. But the other sectors are more interesting, because worldwide, electrical sector for aluminium is less than 20%. In India, it's 40%. The other sectors where aluminium demand is coming in is transportation. So whether it's high-speed trains, these bullet trains are all aluminium. Whether it is, let's take electric vehicles that we are talking about, those are heavily aluminium intensive. If you talk about affordable housing, there, believe it or not, huge amount of aluminium usage to make these molds, so that you can build prefab houses quicker. So that we are starting to see. So those are what I would call nascent demands that are going to be a trend for the next few years. So if you ask me, over 4 to 5 years, the demand, which was 40% electrical, will probably come to 20–25% electrical, and will move to the more traditional things like building and construction, transportation and packaging. In China, the largest sector that uses aluminium is building and construction. It's not electric.
Sure. You've spoken about expansion. Let's talk about the domestic side downstream, which you're aiming at going. What is the rationale there? How's the demand trends, and what will the plan be?
So Indian economy, as it grows, needs more finished products. It needs more flat rolled coils, it needs more extrusions, it needs more foil. In Hindalco, we had the situation where we have a 1.3 million ton primary aluminium capacity, but only about 300 tons, 300 KT, 300,000 tons of rolled extrusion foil capacity. So what we see as an opportunity is to double this 300 to 600 KT over the next 5 years. We get another additional $100–150 per ton EBITDA more over the metal. And at the same time, we are trying to reduce the imports coming in from China and the others, because the economy finally needs finished products, not just raw aluminium.
Right. How much exactly have you lined up for domestic capex, and how much is the overseas capex? Novelis also is talking about capex now.
So we are guiding this current year about 1,600 crores of capex, up from 1,100 crores last year. And Novelis is also going to spend about $370 to $400 million of capex compared to $270 last year. So both companies are now getting into that growth phase.
Sure. Let's actually shift focus now towards Novelis. You've spoken about focusing more on auto sector, because obviously the demand trends are good, and auto is one of the largest industries of US. Do you think this demand trend is sustainable? What is the assessment you have of auto sector health there in US?
So I'll give you what's happening in the US. You have to realize the largest auto market in the world today, by the way, is China. So the same trends are happening, and it's probably happening faster in China. So let's look at the auto trends. First trend is that people are buying more SUVs and larger cars rather than smaller cars. Maybe the smaller cars are going into the Ubers and mobility on demand. But when people buy cars, they're buying bigger cars. Bigger cars, to meet emission requirements, need to lightweight. So that is where the aluminization is happening. So that's one big trend.
The big trend,
and that today takes about 90% of the aluminium that we are selling into the auto. The emerging trend is electric vehicles. Now, electric vehicles, their biggest thing is the size of the battery and the distance you can get. The lighter the car, the smaller the battery that you need, and the longer distance you can go. So electric vehicles are what we would call heavily aluminium intensive. So these two trends are playing out in the US, in China, and even in India. If you can see, the Indian government already came out with the first tender that Tatas and Mahindras won for electric cars. Those have to be aluminium intensive.
So talk to us about, once this expansion of $300 million plus in Novelis and about 1,600 crore here in India, when this actually comes into place, you also wanting to do more value added product line. How on a blended basis, on a console balance sheet, how will actually it improve your margins or improve the outlook of profitability?
So I think, as I was just telling you, on the downstream side, we'll be adding another $150 per ton of EBITDA on that additional 300 KT of downstream we are putting in. If you take Utkal Alumina, we are adding 500 KT of alumina capacity. The margins, if I take today's alumina prices are at 500, we'll make more than $300 per ton. So from a EBITDA and a margin perspective, these are highly lucrative investments we are making in India.
So you also be conducting a lot of research, not only about your competitors, the sector, but global demand supply, forecasting as well. Where are we right now as far as the commodity cycle is concerned for all these base metals and industrial metals?
So, the base metals is an interesting thing. I believe that aluminium especially is a metal of the future. Okay. So I think that the aluminium demand cannot be just related to steel or other demands, because what is driving aluminium demand? It's being driven by many of the new age things. So we talked about EVs, we talked about cars, we talked about planes. Those are all made from aluminium. Your smartphones are made from aluminium. Your cookers are made from aluminium. So all this is driving a new demand for aluminium. It will continue to be cyclical. I don't doubt that. You will always have cycles. But I believe that at least now for the next few years, we could be on a maybe what you would call a slightly better part of the cycle.
So you mean to say that there is a probability that in the next 5 years' time, a lot of replacement or usage replacement will start happening wherever steel was used, which is more of a metal of the past 40-50 years, will get replaced by this demand plus incremental demand for
I think that, just to be fair, even steel is coming up with a lot of innovations, and I think they will take care. I think it's not just replacement. I think there's a lot of additional demand. If you take electric vehicles, that's an additional demand. If you look at all the electronics that we are doing today, people would normally buy one phone and sit for many years. Now every 2 years you buy a new smartphone. So, I don't know if you realize, but the Gorilla Glass on a smartphone is made with alumina. Okay. So one of our biggest customers is Corning, that we supply alumina to. So there is a lot of usages of aluminium happening with these new electronic gadgets that are coming up.
So there are sufficient demand drivers in place.
Correct.
But the point I wanted to understand that last 7 years, what we have seen is one of the prime drivers of industrial metal prices was the sharp supply cuts. Some intended and some were not viable. It is all part of the cycle, and that triggered a very nice. If you look at a 7-8 year chart on the LME prices, the pricing going upwards. But with the advent of pricing coming back, supplies are increasingly trying to come back. I wanted your view on that. What is the demand supply mismatch?
Yeah, let's take a look at what has happened, as you said, in the last 7 years, because I think 2007 was probably the peak when aluminium hit 2,700, and then 2015 Q3, I still remember, it hit 1,300. What has happened is that metal prices, you take any metal, you take aluminium, you take copper, you take steel, 50% of the production and consumption is in China. Sure. So you have one country that has a huge impact on what happens to that commodity pricing. So if you want to predict where are we and what's going forward, you do have to have a view of how China is going to behave. So if you now look at China and aluminium, they are cutting back capacity, they're trying to control pollution. So if they can be disciplined, meaning that their aluminium capacity is more or less what they need for their consumption with some amount of export, not 50% for export, then I think you're going to see some stability in prices. Will more capacity come back in the US? Probably yes, if aluminium prices hold at that level. But generally in the last 5 years, aluminium smelting has moved from the west to the east. So today, I don't know if you realize, besides China, the largest area where aluminium is produced is the Middle East. Bahrain, Saudi, Abu Dhabi, all of them have associated gas, and they have tried to diversify away from oil and gas by getting into aluminium.
So the other significant thing which your quarterly press release talks about is the way you've reduced your debt levels once again. Yes. Talk to us about not only this, the number it has come down to, But what is your overall plan to bring your gearing at and to lighten the balance sheet?
So, couple of years back, we were at a net debt to EBITDA of 6 to 7 times.
Yes, I remember that.
So from that time onwards, we took a conscious decision that we are going to deliver. We did a QIP in February of 2017. We made a commitment that we will use the proceeds of that QIP and some part of our treasury. So since that point, we have reduced debt in India by about 10,000 crores. This current year that just finished, we paid 8,000 crores back. So today we are sitting in India with a net debt to EBITDA of 2.62, and Novelis as well had done its refinancing.
Yes.
They're largely bond based, so it's not a question of repayment, but their net debt to EBITDA now is at 3. So as a consol, we are down to 2.82. Going forward, the India business, which is more prone to the upstream cycles, we think that a 3 or below net debt to EBITDA is prudent.
Okay, so you can maintain it correct.
Yes. For Novelis, we think we can probably go up to 3.5% because it's largely a downstream business, not dependent on the LME.
And obviously, you have done a transaction of refinancing, so the rates have compressed.
And the rates are compressed, yes.
So, purely from the way cash flows and internal accruals are supporting the process of deleverage, which is you're doing, are you also looking at some more transaction, be it in Novelis in terms of refinancing more paper there, or perhaps some fundraising here?
So look, I think Novelis, there is, we finished all the refinancing. We refinanced all the bonds and we got a substantial reduction in the interest that we are paying out. We refinanced the term loans. So Novelis refinancing is more or less complete. In India today, we got about a net debt of about 16,900 crores. We think that we will probably be doing a little bit, going into the corporate bond market, which is what the RBI wants us to do, and reducing maybe bank loans a bit further.
Right.
So that's the only refinancing we are looking at, but we'll have to find the right window, not right now.